Some very big news of today. Dow Chemical buying fellow chemical company Rohm and Haas for more than $15 billion. And joining us now from Midland, Michigan is Andrew Liveris, Dow Chemical Chairman and CEO. Andrew, great to see you. I've interviewed you over the phone, but in person on this very big day for your company. Andrew, first.
Thank you, Dagan.
A 74% premium for Rohm and Haas. Some say you overpaid. What do you say?
Well, instant day premiums are fascinating topics. They disappear within a week or two. Remember, during this whole market correction of the last month, there's been lots of stocks being corrected. This is a high-quality asset in the chemical space, previously unavailable, strong scarcity value. Call it beachfront property in California. I mean, in our space, to find a high-quality company like this available, frankly, Dagan, it just occurred in the last month. And we've been waiting patiently for quality. We believe it's a very, very high-value deal for our shareholders. It's accretive by end of second year. We were able to change our entire earnings profile. We're taking the funds from our Kuwait joint venture, which is in a cyclical business, and moving it into a high-quality, high-margin growth activity, which is Rohm and Haas. I think it's a completely in-step transformative move for us where the one-day premium is almost irrelevant.
Andrew, talk to me a little bit more about how Rohm and Haas's business lines fit into Dow Chemicals.
Well, Rohm and Haas has changed itself over the last 5 to 10 years into an advanced materials company with strong emphasis in electronics, which is a high-growth market, of course, in coatings, very technical coatings across a whole span of industries, and other markets, which I won't get into for the sake of brevity. But these sorts of end-use markets where they have primacy of position, they're either number one or number two, we can supplement and complement with technologies that we have that previously we wouldn't have had channels for, such as in electronics, for example. A completely new business line, but we have technology. Equally, we're big in coatings ourselves. We have positions in water and energy. We can complement their positions. And geographic reach, they have a big footprint in Asia, double ours. We can add complementarity there, and similarly in other parts of the world.
How confident are you that you can get to that $800 million cost saving? Some concerns expressed from investors and analysts today about that.
Look, we've delivered against that in all of our previous deals. In fact, if you do as a percent of target sales, we are at that $800 million is 9%. Every other deal we've done, we've delivered double-digit synergies on the cost side, inclusive of the Union Carbide deal, where we did about 18%, double what we're saying here. These are all backroom synergies, supply chain, shared services, governance, very attainable.
But this is a bigger deal than any other that you've ever done. What about antitrust issues? Can you get past those down in Washington?
Yeah, we believe we can. I mean, at the end of the day, this is a deal that will take 6 to 9 months, maybe a little longer, to close. Antitrust will definitely be part of the equation. We believe that we have, if needed, remedies that make sense. We factored much of that into the agreements that we put together with Rohm and Haas. We understand how that process works, but this will not stop the deal closing. We believe we have solutions, if required, for anything that might come our way.
Andrew, why did you have to get Berkshire Hathaway and then the Kuwait Investment Authority involved in terms of the financing of $4 billion or so with the two combined?
Well, I think it's very simple, Dagan. It's really getting them involved. We didn't need the cash, but frankly, both Berkshire and KIA have expressed interest in our story. And as astute investors, I think they've seen a stock that's undervalued because it's called a commodity, yet no one has looked at the transformation and said, you know what, this company is going to change its entire earnings profile. And I think Berkshire coming in and expressing interest was a great affirmation and validation that they believe we're undervalued and that we could change our profile. KIA, on the other hand, is a longtime friend. We are very strong in Kuwait with the Kuwaitis, and they wanted to be part of the transformation story as well. Didn't need the cash, but the validation and what it does for our story is huge.
What does this deal say to the customers? You had to raise prices twice in about a month, the June 1st price increases and then the July 1. What does this say to them who are facing that?
Well, I say to them what we're told when we have to buy feedstocks and energy and oil and gas that's gone up 42% year on year. I mean, I don't control any of that, and therefore the value chain has to change. If they need our products and, you know, we provide products of value, then the value chain should be reset. And so, look, these aren't easy conversations. I'm listening to, of course, the Senate hearings. I mean, all of these conversations are the consequence of $135 oil and very high commodity prices. So we have to pass them through, and we are.
Since the last time we spoke, talk to me how the business environment here and abroad has changed. Has it worsened?
Certainly in the United States, I think we're seeing a continual worsening. I think inflation, headline inflation, I think the consumer at $4 gasoline and high food prices, I think these price increases we just talked about, I think share of wallet, I do believe the U.S. economy is really weakening. And I think the stimuli that have to be brought in, I think there aren't a lot of levers. What's saving all of us still to this very day is the global economy. We still have healthy growth rates in the emerging world, and our joint ventures with low-cost hydrocarbons and energy are doing great. So I think the U.S. is getting worse, not better.
Any more price increases and even production cuts that you're weighing right now?
Yeah, I think it's a great question. We have, obviously, on a weekly basis, we're looking at the ability to run assets at high input costs. If you go below cash costs, you obviously shut assets down or you idle them, like we did in the last announcements. Price increases, asset idling, demand correction that's going on due to demand destruction is a weekly exercise here right now. We're watching very carefully the stickiness of our last price increase. We'll get through the next month or so and make the decision whether we need to do more.
The next, one last thing, Andrew, your stock is down about 4.5% today, a 52-week low. What do you say to your shareholders?
I think the shareholders and the reactions to an acquisition of this size, it's not unexpected. I'd like to go back to the reaffirmation from people who see us as undervalued, like Berkshire Hathaway and like the Kuwaitis. We believe we're an undervalued stock. We will deliver on these synergies. We will deliver a new earnings profile. We have walked our talk with every single step we've taken. This is not yesterday's Dow Chemical. It's tomorrow's Dow Chemical, an advanced technology, high-margin company that is now in place with the Rohm and Haas deal. So, frankly, a great opportunity at these numbers.
Andrew, that was a very, very definitive statement from you. That was very to the point. Thank you so much for being here on this big day for your company, clearly. Andrew Liveris, the CEO of Dow Chemical.